What's up, traders, and welcome back to Uplift Markets. Today we're breaking down Goldman Sachs Q1 earnings, but we're not stopping at just the numbers. We're going deeper into what this actually means for the macro environment, investor behavior, interest rate expectations, and the true state of the US economy. So, let's get right into it. They reported recently their Q1 earnings, and the headline beat was pretty strong. EPS came in at $14.12 versus the $12.33 expected. Revenue came in at $15.06 billion, which was a 6% year-over-year increase. Net income came in at $4.74 billion, up an outstanding 15% year-over-year. Now, the Global Banking and Markets division was pretty outstanding as well, coming in at $10.7 billion in revenue. And their equities trading had a record $4.2 billion, up 27% year-over-year. But on the downside, investment banking or M&A advisory was down 22% year-over-year. So on the surface, it looks pretty impressive. But what does this exactly mean? Well, the strength in the Goldman Sachs trading division tells us that the volatility is driving the revenue. That's not necessarily a sign of economic stability. It's a reflection of a market that's repositioning aggressively amid the uncertainty. Equities trading is booming because institutional capital is flowing in and out at a rapid pace, driven by inflation revisions, the rate cut expectations, and geopolitical risks. Traders are active, but investors are cautious. Meanwhile, the 22% drop in investment banking revenue, specifically in M&A and advisory, shows us corporate confidence is softening. CEOs aren't doing deals, they're sitting on the sidelines, and this tells you that they're pricing in risk, whether it's from rising costs, regulatory uncertainty, or macro shocks. Now, this divergence is something that you typically see in late cycle conditions. So let's analyze the actual equity. What is Goldman Sachs doing on a daily chart? Well, the price action has failed important areas of support, the 50 EMA, which is an important indicator psychologically. But something important to take a note of here is that we may see a bounce after these earnings especially, which came in pretty positive. We have the swing high anchored VWAP right here, which is the average price in which the sellers came in at that high. And currently, it's 546. Currently, the sellers are in control. Now, this line right here is the 2024 anchored VWAP, which was when it was mostly the initiation that we found buyers exactly at that level. Right here. Very nice to see that. And with this, we also saw RSI bottoming. This shows that this could be the bounce that Goldman Sachs have been waiting for, right? I potentially see further upside if we continue this bounce and the buyers hold their levels of 496 towards the 50 EMA, right? Now, in order to be fully bullish, we have to get above the $583 level, which would be that collectively the buyers came in strong and the sellers are now, on the average, losing money. They have to cover their positions, causes double buying, and the stock moves higher, which we can challenge the highs again of 670, right? But in this case, if we see this strong bid and the sellers are intense, right? You see this confluence, how the swing high anchored VWAP is really close to the 50 EMA. It shows that there is an interest from the sellers here, right? We could find sellers exactly at this point and then reject off that level, just like that. And this is exactly what happened with the overall NASDAQ. If we go back, you guys can see that we had that same movement, right? Look at, so this is happening with Goldman Sachs, right? So we had the buyers come in, right? We found a small little rally, but we had that same confluence, right? The sellers that came in from this high, let me just change that to strong red, right? They were present and they brought the stock back down. They overwhelmed the buyers. The buyers failed to hold a level and we saw that decline heavily. Of course, we've seen a bounce now, but this is what could happen if Goldman Sachs, the buyers fail to hold their level, right? We see this bounce and then we have that strong sellers coming in. They enter again at cheaper prices and they just overwhelm the buyers. So something very important to look out for on Goldman Sachs, right? So additionally, if the buyers fail to hold that, then obviously we're going to be seeing further downside. But if the buyers in this case overwhelm the sellers, then we will see further continuation towards even the highs and possibly get above the $583 level, which would be completely bullish. And on average, all the positioning, or the longs in this case, would collectively all be winning or being profitable, which is more sustainable and most likely is going to lead the trend higher. So after looking at this daily chart, like I said, we have to watch out over the next couple weeks if the buyers allow and actually hold their levels. What we don't want is the sellers to come in aggressively and bring the stock lower. So you may be asking, well, what is the key takeaway here? Well, the Goldman Sachs results don't just reflect the performance, they reflect the positioning. And in this market and under the current conditions, there's a shifting of narrative of a soft landing to something more nuanced. Inflation is cooling, yes, but it's a little bit stickier than expected. Rate cuts are on the table, but they're pushed out. And while consumer data remains stable, forward-looking indicators like M&A, hiring freezes, and capex cuts are flashing caution. Even David Solomon, Goldman CEO, said the quiet part out loud. We are in a markedly differently operating environment, and that tells you everything you need to know. They see the economic slowdown, but unlike previous quarters, they're not preparing for it and not just hedging against it. This isn't a collapse scenario though, but it does signal slower growth, tighter margins, and a more defensive rotation in capital markets. So, if you're swing trading this name, please let myself know in the comments. And as always, if you're looking to buy this name, be careful, manage your risk, and don't let the market whip you out. I'll see you guys on the next one. Peace.